Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. We're going to kick off our morning with, there we go, some charts. Good to see you all. Happy Thursday. And let's go ahead and dive into, well, probably the biggest thing that everyone's going to be looking at, which is Apple. A couple of things. If you haven't ever checked out the 642 earnings window full article that we have over at countdowntrader.com. Check it out. I also did a update over at the Simpler Trading YouTube channel as well as mine. And that video, which you can find, check it out at your leisure, was all about earnings step by step. And we did that in the wake of live. We did this recording during the Microsoft, Google, and Visa earnings. And one of the things that was really cool about doing that is we go through that very systematic process, that methodology of looking at what is commonly referred to the run up or rally into earnings. Now, it's not really the rally into earnings that I'm focusing on solely. It's what is the likelihood of continuation to the earnings date and then really jumping off board before the volatility of earnings. So I thought I'd do that. And because we haven't yet got Apple earnings, I thought, you know what? Let's do that right now. Let's go through the 642. Now, it's really easy. If you've got a drawing tool, I'm trying to find my drawing tool here on, there we go. So if you've got a drawing tool, just drop a vertical line on the day of earnings. So today is the 2nd. And then I want to drop a vertical line 2 weeks back, right? So if today's the 2nd, 2 weeks back from today would have been the 19th. So right there. Now, why do I mark this 2-week level? Because this is where implied volatility commonly starts to favor traders who want to generally buy, right? We fall out of favor, those of us that want to buy directional debits, right? Long calls, long puts, implied volatility goes up, the likelihood of vol crush after earnings release, all those things that if you are a purchaser of an option, these are things that are not in your favor, right? Okay, so this is the window that I really want to slow down any kind of entry before Apple. Now, 2 weeks before that is the 5th. So let's grab that. And my water bottle is right in front of my monitor. Would help to move that. So next we have the 5th. And here is the 4-week window. The 6 stands for starting this process of, hey, what do I want to trade 6 weeks out? Or what are the things that I may not like about this particular name 6 weeks out, right? And that would take me to the 21st. So yeah, for a November 1 release, I'm really thinking about starting at least the scan September 2/1, right? So there's the layout there. Yeah. And again, we're talking about Apple. We don't know what's going to happen. I'm going to show you one other thing that I look at, but we don't know what's going to happen. The thing that I want to keep in mind is if I'm going to be and I like to focus on long calls only if I'm going to focus on any kind of move into earnings. I prefer not to be in puts. I would like to focus on long calls. And that would require that the stock, and let me grab my drawing tools here, that would for me require a really basic requirement. I mean, it's really simple. Anyone can do this. Throw a 200 exponential moving average on your chart. I use this propulsion. This is actually the combination of an 8x200 cross and this white series of dots plots where a 200 EMA would be. I want to see that price is clearly above that level. So really, you might say, Rog, are you going to trade Apple into earnings? I wouldn't. The edge that is typically present with a stock that is clearly above the 200 is not present in Apple. Not at all. So are there trades? Sure, but I'd be just as likely to look for shorts in the resistance gold area as I would be for buys in the gray, and that might be a 1 to 3 time horizon, 1 to 3 day time horizon, irrelevant of earnings. So The bottom line here is, as I go through 642, not really at all a name that I want to focus on for earnings. And that might seem crazy. Oh, Apple's such a big, it is. And its impact is gonna be, obviously, the ripples will extend far past the stock into XLK, into the NASDAQ, into the S&P, into the Dow. But this doesn't present a really great set of criteria that I would say, yeah, I've got a high probability play on earnings. So there you go. That's how I break down Apple. Am I interested in earnings? Sure. Do I feel like I have a high probability edge? I do not, right? And you might say, well, okay, Rod, given all that, can you tell us what the most recent, the last setup was on this chart? Yeah, that's pretty easy. Right here, you'll see that the price ticked right into the daily price movement range. That was the last time anything looked even remotely interesting in Apple. And you'll notice, why is that valid? We have a neutral yellow structure. This is the lower row of the multi-trend. We have a neutral yellow structure. So this is essentially an oversold support driven buy. And that's it. That's the last trade that we have. And you'll notice right now, pre-market, we're trading in the gold zone, which would mean ideally this is a target and you scale out, right? Is this my favorite chart? No, I like to see much more clarity above or below the 200, but a lot of folks will ask, okay, Rob, what was the last thing we had on Apple based on what's on your chart? That was it. All right. So that is Apple as we get ready for earnings. And again, remember where the stock is heavily weighted in important sectors. And again, XLK, that's it right there. Okay, and again, just a reminder, if you want to check out the way we did the same process for Google, Microsoft, and Visa, check out that video that we cut live in the wake of earnings at the Simpler Trading YouTube channel. All right, so let's get to it, gang. Good morning, good morning, good morning. Great to see you all. So first question is, do I have any thoughts on SPX for a day trade based on the opening 30 minutes of price action? Do I have any thoughts on it? JR, so I don't kind of follow the question. I need the opening 30 minutes. So what are my thoughts? I do want to look at the opening 30 minutes after the bell. So if you're looking at a different 30-minute window, then let me know. So yeah, I always have thoughts on the first 30 minutes. That's the clearing range or the opening range. And that range will give us some key volume levels, some key inflection points during that period of time. We're talking about the open day after Powell. When I take a look at bond yields, they're down as ZB's moving higher. And we're taking a look at the VIX moving lower pre-market. But again, whether it's SPX or whether it's S&P, I'm always going to start with the futures contract. So I'll start with what ES is indicating. And ES is in an uptrend. But it doesn't mean that we'll be able to maintain the uptrend in the first 30 minutes. So do I have any thoughts on it? Yeah, I like to do it. I will find a few ranges to focus on. One, are we above or below the previous session close? We are clearly above it. Two, what I take a reading I call the Pingala from the first 5 minutes of price action, and that gives me a pretty nice level from which I can gauge very, very near-term bullishness or bearishness. And then ultimately, the direction with which I will focus my trading is, what is the structure of the S&P futures that will map to SPY, that will map to SPX, right? And then I'll likely be a buyer unless something dramatic happens at the bell. All right, next up. All right, so let's see. Next question. Hey there, Christian. Today and tomorrow is a caution day. I'll tell you what, Christian, the day of FOMC used to be a massive caution day for me. The volatility, the unpredictability was always going to decrease the probability that the way that I could manage risk was going to be a reasonable way to, embark on trading before Powell speaks, or even in the wake of the presser. Yeah. It's interesting that the movement in the day after has been far more volatile than the day of. We took 2 trades yesterday, actually 3, right? I'm trying to think. We did Amazon, we did QQQ, we tried to get SPY. We had some really late session entries that followed through in a minor way, but we had a number of trades that were actually pretty well structured and followed through nicely before noon. And then I'm going to leave, noon to 2, because that's going to be a lot of wait and see mode. Today could be really tricky. So the question of how can we adapt on such days for day trading? I think what we need to do, Christian, is on days where we know there's going to be an increased amount of volatility. Obviously, Apple's going to add a certain amount of volatility. We know Jolts was a big part of volatility yesterday, although Jolts was great because market took off in the morning, Jolts released, pull back, and that's how we got long Amazon and the Qs. So sometimes those hot zones give us the volatility we need to play that pullback buy, which was great. And then, we'll look for something like that today. Non-farm is going to be a different animal because non-farm is an 8:30 hot zone. And there may or may not be an opportunity at 8:30. We'll have to see then going forward what happens at 9:30, right? So are there windows in terms of the opportunities? Kind of going back earlier to JR's question, right? Whether it's the opening 30 minutes or not, what are the things we can do? What are the things that we can do in the opening 30 minutes, right? And that's where, again, I'm going to look at what this trend is going into the bell and what trend do we maintain or shift or strengthen during that 30-minute opening range clearing period. And by the way, it's going to depend on the time frame you're looking at. I look at a 5-minute time frame. The other thing I would consider is, again, pull that Pingala. If you don't know how to do it, there's a full explainer back at my YouTube channel, Raghee Horner. You can check that out, how I do it. It's a process, not an indicator. And then lastly is the multi-trend. So everything for me is going to be bullish this morning. And then if it's price action after a hot zone, Christian, then I'm going to presume the hot zone either maintained or created the trend. If it's a hot zone, if it's a high impact release still in the horizon, still when we're traveling to, what time is it? Can we use it? Right? Can we use it? And ultimately, what type of opportunity would it present? Case in point, yesterday's Jolts. I don't want to trade the Jolts number. I just want to be aware of when that number comes out. And then if it creates the pullback like it did yesterday, I use that volatility. So, I don't want to get into too much of, what I think I'm going to do. I really don't know at 9:13 in the morning what ultimately we're going to get. So I think there's an interesting mindset, just, based on the questions this morning. I think there's a really interesting mindset of, is trading about prediction? Gang, please don't put that pressure on yourself. Nobody knows what happens next. Nobody, except for Jerome Powell, and he's not giving us his S&P target. So nobody knows what happens next. So then we ask ourselves, are we, if we want to use baseball, right? Congratulations to who just won the series? The Rangers? So, let's use baseball as an example. I have not watched the series at all. I knew the Rangers were up. They did win, right? So if I'm thinking about baseball, am I the pitcher or the batter when it comes to trading? I'm the batter. The market's the pitcher. The market's the one throwing balls at us, pitches, strikes, whatever it is. We know what our strike is. We know what our best pitch is. The pitcher doesn't. Maybe they do, and they're not going to give it to us, right? So if I think about, I'm the batter in this situation, the market's going to be the pitcher. It's throwing pitches our way. My only job is to say, is this a pitch that I can connect with? That's it. So I'm going to always presume I don't know what's coming next. My approach is never going to be predicated on any kind of predictive power that I simply am not bestowed with. So ultimately, if I remember, to use a boxing analogy, I'm a counterpuncher. Traders are counterpunchers. And there's a lot of wisdom in that too. So that's ultimately the way I'm going to look at this. Let's get the action. Let's see what kind of levels we get, right? And then we'll make decisions based on what we actually have. And please remember this too, gang. The sentiment pre-market is not always the sentiment, the trend, the movement that we'll see after 9:30. And sometimes it can be jarring how much it does shift in those first 30 minutes of the action after the bell. All right. Kay Harper asks, can I describe what am I looking for to know when swings may be more than what we have seen lately? In other words, when can we get swings going again? Great question. So let's define basically two types of trading that I like the most. I love day trading. I love day trading really for about an hour a day. Can you day trade more than that? Yes. My day trading window in the morning is 9:30 to 11:30. In the afternoon, it's 1:35 to 3. So I'm really never day trading more cumulatively than 3 hours a day. I prefer trading 1 hour, 9:30 to 10:35. So can I reduce that attention to 1 hour? Yes. So that frees up time for what Kay's asking about, which is swing trading. Swing trading for me is overnight exposure, period. Right. So if I want to swing trade something like, I don't know, Amazon, or there's a symbol someone wants to take a look at, cool. If I want to swing trade something like Amazon, then I'm going to take a look at the 1 hour and the daily time frame. So notice I'm not looking at 8 time frames. I'm not looking at multiple time frame confirmation either. I'm looking at the structure on a specific chart. Well, interestingly enough, the 1 hour chart of Amazon is in an uptrend. All right. This is the green row of color sitting at the bottom of my screen. All right, cool. That's one thing that I have in my favor, really good structure. All right, the other thing that's interesting is we're above the 200. And if I can pull back, now take a look. This is one of the things I love on TradingView, this volume profile. I've got a big old volume ledge right there. I've got another ledge here, and I've got the point of control down in here. Now, this is the point of control based on a visible range volume profile. So I should align this to be less arbitrary, but nonetheless, you can see where we are. And we're above the 200 right there. Would I like to be a buyer? Yes. And I probably wouldn't even think about being a buyer until we get down to about 132. So I know there's a possible trend following move. I've got support at a volume ledge at about 132.80. I've got an hourly, daily price movement range, volatility based support level at 131.53. That's not a terribly wide range. So if I'm looking at this morning for a swing, that's really what I'm going to focus on, right? That's really what I'm going to focus on there. Ultimately, when we have any kind of action lower into support, and notice how I define the support zone here, volume, which is this edge, and volatility, that was that edge right there. And that would be an example, okay, of something that I would look at for a swing with the ambition of taking this overnight. If it's a 1 hour time frame, I'm looking at about a 1 to 3 day time horizon. And that's what I would look at. So it may be really still more of a 60-minute time frame type approach, maybe not daily, because daily means longer time frame maps to longer time horizon. And I don't know that I trust the market to follow through for days on end, if not weeks, without a dramatic amount of volatility that shakes me out or creates a situation where I'm taking on more risk. The 1 hour helps me deal with that. The 1 hour helps with shortening the time frame, shortening the time horizon. I can keep a tighter stop. I can have a more active approach. And in this case, I have a trend on that 1 hour. So those are things to keep an eye on. That's the way I would look at that. All right, last question of the morning, real quick. Squeeze this in under the wire, is from Patrick, who asked about the QQQ 5-minute 360.73 level. So Patrick, I'm going to wait for the bell. That's in about 10 minutes. And then I'm going to wait to see if we can maintain the uptrend, which we have still on QQQ. We also have that on the NQ futures. Fantastic. So we have clarity right? We have directional bias. We have clarity in terms of wanting to be a buy the dip trader, right? Mean reversion, retracement, whatever you want to call it. So the level of 360.73, I don't know that that pings for me with much at the moment. What I will say, although I have a level that's kind of close, I have a volatility level at 360.80. And then and that's an aggressive volatility level. I have a much less aggressive volatility level down at about 359.30. So it depends on how aggressive I want to be. I would not be aggressive right at the bell. I'm not a big fan of getting in right at the bell. Maybe waiting anywhere from 5 to 10 minutes just to get a little bit of structure, to get that pingala. Those types of things would be really important. But ultimately, I like the long. So I like to be long. So I'm with you there, Patrick. All right. So thank you as always, gang, for the questions. Thanks for being here for Charts and Coffee. And I will see you tomorrow. Same time, same station. Be good to each other, gang.